The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And what's even more important is my pleasure to be the third one up in the roster that we have, starting off with John Logan. Great show. Steve Rose, another tremendous analyst. And, of course, I come in here at 11 o'clock, do my best. Today being Thursday, you got a wonderful artist coming up, Larry Pesavento. He works those triangles. He looks at those Fibonacci figures. He looks at the Gartleys and the butterflies, and just a wonderful analyst. So I think that we got a great lineup going right through today, 6 o'clock. And let's see, Larry says he also works at McDonald's. Excellent. I wonder which McDonald's it is. McDonald's Las Vegas, I guess. Okay. So here we go. Dow's down 54. S&P's down 871. The composite index, if I can just move this away, the composite index right now is down 26. Interesting. You've got gold down 1. It's really been struggling. I want to go through that when I get to the dollar. I'll go through the gold. Silver is down 21 cents. You've got high-grade copper. Remember we were talking about 3, it was 302, 303. I said, it's going to really hold there. Everything about it looks like it wants to go under $3. This is the world economy, as I read. Remember the summer of 2010, I was talking about copper, how strong it seemed to be under the conditions that we were looking at, market conditions. So what I'm going to do now is I'm going to talk about a couple of things. But first, I wanted, if I can grab this. I wonder if it's still up. Yes, it is. Wonderful. I just had to do something earlier on. So what do you think I have? You know, I talk about skyscrapers. I've been talking about skyscrapers since 1986, 87. I thought it was my skyscraper theory, but actually it was a guy in the 40s or 50s that spoke about skyscrapers. Well, what do you think? Front page of the Boston Globe today. This is the conservative. You know, in Boston's the last one to pick up on a trend. California first, Boston last. Well, probably Maine. Maine is even worse. But most importantly, when Boston finally picks it up, it's pretty much to the end of the trend. That's just my opinion. I've been here for over 40 years. That's my opinion. And whenever I see announcements of now we're going to get those extra 3,000 or 6,000 hotel rooms, whoa, you've got to be careful. Recession coming. Well, we're starting to get that report. But even more importantly, when I arrived here, the Prudential was the only tall building here. I came from Johannesburg, South Africa. Buildings get knocked down, and beautifully designed buildings by real architects, not these little cookie cutter people that come out and call that architecture. No, these are people that design real buildings, like European cities. And I came here, I thought, wow. What a backward place Boston was. Well, it really wasn't a backward place because there are other things that were really far more prestigious and sophisticated. However, be it as it may, I've been, for my subscribers to my opening call, I've been diagramming and I've been showing all the number of times over the past few months that Boston is starting to put not the word tall building, but skyscraper. And right here it says Boston front page, huge new skyscraper in the Boston area near Government Center. Now, I have to tell you that Government Center building, when I came here, it had just been completed. And I thought, wow, a concrete edifice to some architect's ego. It was really one of the ugliest buildings I had seen. I happened to be down there just half an hour ago, in fact. I still think it's one of the whole area is just so ugly. So this, whatever they put there, should be very good. Although the Heinz Auditorium, they try to redecorate that, and they've kept trying for years and years, never worked out. I love the John Hancock building. Prudential, to this day, I still think is one of the ugly buildings. Now, look at this. A skyscraper. I couldn't get the entire picture in, but isn't this amazing? look at the size of it. And actually, unlike that eggshell design, like a vertical football in London, I can't stand that kind of building. It's a bulbous, ugh. And now they've got that Ferris wheel as well. Of course, like the Eiffel Tower, the Ferris wheel will be there for another 100 years. It was only going to just be there for that one of the big events. Okay, enough yet prattling. Let's go. Anyway, the skyscraper theory that I have, man's ego, an icon, a time freeze ego to man's icon. No, a time freeze icon to man's ego. And it's usually men, so I'll say man. It's not generic here. It's usually men that do it. So let's get rid of this. Let's get back to our charts. You can see the E-mini right now is down 10. It's starting to test the left side wick. And what I said to subscribers to my opening call now, remember, for a couple of weeks now, we've been mostly looking at the short side. As far as I was concerned, there was a trend change taking place, a tidal change. Let's put it that way, that it wasn't just a short-term trend change. There was just the possibility that weekly charts, remember I've been questioning the Dow weekly chart. I said my eye tells me one thing and the lettering tells me another. I'm going with my eye, and my eye says this is that double hump camel then I won't get into it. So this is the right shoulder of the stochastic, which will start to fail very soon. So you've got the E-mini down 1175 at this particular point, testing the 1929s, the only low bar after the big takeoff on the 8th of August from 1882, takes off and then pulls back just for a day. Not even a day, it's intraday. It pulls back to 1929.50, and that becomes the trough. Well, this morning we went under it. We went to 1927.25. Right now we're at 1929s. So this is going to be really important. Look, the MACD is still very ugly. Stochastic is not finding any strength, but it's getting to what we call on the upside overbought. I don't say this is an oversold condition. What I say is in negative territory. It's in a territory where it should go lower until certain things happen. All right? So let me get rid of this. In the meantime, what I want to look at is a number of questions. I want to get to those questions, but I also want to deal with what I've got here, and I'm going to show you something. That volume, you remember I'd said, and I said to my subscribers for quite a while, meaning a couple of years, that until there is a pullback that starts to see the market completely ignore any good news, bad news, no news, any news, but anything becomes an opportunity to sell. And intraday, you start to see rallies fail immediately, just like the upside, but the opposite. Sunny day, beautiful, no skies. Just you can go out in your summer clothes, no worries whatsoever. We got the winter clothes on now. This is not, we're looking at the very opposite, but I'm going to be very patient. Everything about this weekly chart in the E-mini, and I'm going to quickly throw up the S&P. Look at this. When you learn how to do channels, when you learn how to use the 9-period exponential moving average, it is a time-consuming and a lengthy process. But as you learn, it's like an instrument, a musical instrument or golf. I love it. People go to buy the brand new golf club. I remember when my students, when I used to teach clarinet, I was a professional clarinetist. I have a master's degree in performing, conducting in clarinet. When I see people with a new golf club, it reminds me of when I used to have students that had come in with a brand new clarinet and brand new mouthpiece and everything, and they would sound absolutely fantastic for about 5 minutes. And then those old habits come back. It's how you use the tool. And I always say you've got to have your huge Sears and Roebuck toolbox. You've got to be prepared for anything. Look, we are now on a very critical up-channel Chapman wave inside track support area with the MACD having deflected lower. This is the weekly chart, and a stochastic pulling back under 80%. But we've still got 2.5 days to go. You talk about a weekly chart, you wait until Friday at 4, and then you can talk about the weekly chart. But you can talk about the what-ifs. I remember someone once said to me, your show, you're all with this and if that. And I always say, you know what, if I could say emphatically that such and such was going to happen, you wouldn't believe me, because it would never be happening. I have to say, if such and such happens, how do I know? I'm not the trading god. I'm just a mere mortal. Now look at this. You've got the second bar after the peak D top in the Chapman wave. Alternate count, we got to a peak D top. There's that doji candle. And it's going deeply into this up channel support level. All right? If it takes out that on a closing basis, I have to wait for Friday at 4. But if on Friday, and there's a good chance, oh, today's Thursday. That's what am I talking about? It's not Wednesday, it's Thursday. What a week. Whew. If tomorrow at 4 o'clock, the Dow, and I can see there's signs there of people getting really impatient, and the volatility index has not gone to a new recovery high. No, I didn't say that. Let me just go here for a second. The VIX.X, dollar VIX.X, hasn't gone to a new 120-minute high, and this is very interesting because it looks like it needs to go just a little higher, not in this. Well, if it does it in this candle, it's going to be very positive. But it needs to go above 17.49. And right now, the volatility index is at 16.54. So now let's go through the S&P. As the S&P is pulling back, I'm going to be watching that support level. The low of today is the support level, 1934. The daily chart says, I'm getting close to some kind of a rebound. 120-minute chart, which just disappeared. It was right here. Hey, come back here. We just don't allow that during the show for you to wander off by yourself without permission. Come right back here. There you go. So the 120-minute chart is showing the arch formation, that's the dreaded H formation, broke down twice. And now the stochastic's at 8.70%. The unbalanced volume is about to give a little cluster formation. We're real close to a rally attempt. Okay. What I'm going to do, and the S&P weekly chart is the one that I feel very comfortable with, and I've got to thank Z in the Den. We had a long discussion recently about accounts that he had, which would have given me, I would have had to use Phantom Peak. I didn't have to because it actually made that leg D, just like we expect in the Chapman wave. So I went to the leg D, and now it's going to be very important, as I say, Friday's close. Any close where we are right now is going to be very negative. So now let me do this. I'm going to go to the volatility index. I'm sure we've got a break coming up in a moment. I'll start off with the volatility index. I'll put it up right here, VIX.X. Well, it's dollar VIX.X. I'm also going to grab the 120-minute chart hiding behind. Yep, there it is. Come back. Thank you. So here's the 120-minute chart. See the rising wedge formation made a peak D? Even though the Dow is down 65, S&P is down 10. It hasn't gone to a new low. And the New York Stock Exchange, NYA.X, 120-minute chart, there's the break. Whoa, ugly candle, but that ugly candle, oh, we'll talk about that when we get back. We're going to talk about the VIX. We're going to talk about the relationship that with volatility index, as well as some other factors that I want to bring into this. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So we're looking at, let me mention that the IWM, the Russell 2000, is just not looking good at all. So we will, I'll find time to talk with us a little more about the volatility index. Also wanted to talk about the things that I hear when I listen, those times that I do listen to analysts on CNBC or Bloomberg or any of those stations. But let's first go to Scott in Safety Harbor. Scott, how are you?
Yes, very good. I've been playing with Apple all the time, as you know, and it's interesting after I know a lot of people that bought into Apple yesterday because it pulled back. And the strange thing is, Basil, today instead of taking profits, all four of these people, kicked back in the easy chair and we're waiting for it to, take profits.
Yes, absolutely.
I just don't understand what's wrong with people. When you take profits, then it doesn't matter what comes out in the afternoon. It doesn't matter what's going on. Sure,
Scott, let me just interrupt for 1 second. This is actually what I wanted to talk about, tidal changes. When the tide changes in the daily chart, then you've got to say to yourself, okay, pullbacks are for buying. When the tide starts to change on the weekly chart, that's completely different, because then what you want to do is and this is what we're trying to do in my opening call for my subscribers, we are trying to hold as long as possible our we've only got short positions, I should say. We've only got short positions, but we actually have the long side, meaning that these are positions that are maybe 200 or 300% short a particular index. If we aren't short a stock, then we are short an index by buying the long side, because the industry itself has made up these particular instruments so that they have packaged it as a short instrument and you can buy it, meaning you're going to go long, expecting that it's going to go down in price, but your instrument will go up in price. Sorry, its internals will go down in price. That is the stocks that it's made up of, and that'll benefit you because the price will rise because it's the correct call on that instrument. So there's a big difference because there's some people who have IRAs or care plans or whatever it is. They can't, either they don't want to go short, they can't go short, or there are many people that I've always preferred, actually, if I can, not to go short. I don't know what it is. I like to be long. I can handle it. I don't mind being short, but you know what? It ties up capital sometimes unnecessarily in a different position. So I just wanted to say to you, I agree with your thinking, but the trend, even in Apple, I'm going to mention this in a moment. Let me just go APL. I'm not sure if that's what you wanted to talk about. But you remember when we were talking last, I said one has to be very careful with Apple because if it starts to fail, there are two trend lines that are really important. It looks like a triangle on its side, an asymmetrical triangle, a little bit more asymmetrical than symmetrical for demonstrative purposes. If anyone's listening and not looking at the chart, think of a triangle on its side, a symmetrical triangle. Well, if Apple, which is trading at 98.63, down 55, takes out first 98, that's just like that's just the heads up. But if it takes out the trend line and then takes out the 97.72 low of the 25th of September, that that very long-legged candle, I've been talking about that, and I even drew in the rectangle formation. And look at the way Apple went to the top of the rectangle formation. The top for that bar of the 9th was 103.08, and the low was 96.14. If I remember correctly, you had said, I think that was your cue to short. I think that's what happened.
That was correct. But actually, yeah, what I wanted to speak about today was BAC, since
let's
I'm
go
out
right
of all my
there.
positions
BAC.
On Apple right now. The Apple, I think, is as tarnished a little bit, and I just think its popularity, and I'm talking about just the public perception of it with traders, I think will dull out a little bit, and it just the activity, and it may just move back to where you're talking about. But BAC with the chairman now, the CEO. Let some people go, and he's going to take over that position. I just think there's a lot of things, and I'm always of that opinion that as things get worse in the world, the money's going to be coming over here.
You know, I thought about that a lot when I suddenly heard that about a week ago. In fact, that's one of the reasons why a lot of people stayed in the market. I'm willing to bet that this turn down that we've just had has just surprised so many, even the professionals. It's just knocked them for a loop because it's the speed and the tenacity and the way the rug has been pulled. It doesn't seem to be a cushion of support yet. I have my own levels of support that I'm looking at, but we're not there yet. Oh, wow, is that quick? That's a break coming up. So you know what? We're going to go back to Bank of America because I want to introduce you to a thought with Bank of America. Might be a little bit different. It'll tell you what I'm looking at, and then maybe you can use that to your best advantage. So I'll be back in a moment with Scott from Safety Harbor, Florida. Basil Chapman, Dow's down 73.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Scott. So, Scott, let me just quickly ask you, what is the position that you have on Bank of America right now?
I have a large position in it at 1690. It's interesting that it's fallen back to 1675, and Apple is also fallen back to 98.40, which is where it was yesterday and even below. But no one's, calling for a red flag here. But I had suspicions that today was just a little, just a jump that really didn't mean anything, and we'd fall back. I mean, things don't change that quickly, and that's what's happened. We're right back where we were yesterday.
Okay, so now let me deal with what we've got. In my work, the daily, I'll go from the beginning. The 120-minute chart is a beautiful left side, right side price time match, which says that the 1662 level, that's the low of the 15th of September, should be tested within a day or so. And here's the trend line. You can see if you're looking at my charts in Tiger TV, you'll see that there's this inside wedge dash pink line. It's a target support line. And what it says that by tomorrow, is that the 6th? No, that's today's is the, what is today? The 2nd, right? Uh-huh. So why would that be the 6th if it's only 120 minutes? Oh, we've got the long weekend. We've got a weekend. So by Monday, the 1662 level should be tested. But if it can handle, because the stochastics at 10% and the on-balance volume are joining up, there's a good chance there might be a little bit of a bounce if, there's a really big if by the end of the day, the 16 1668 level is not hit, then there's a chance for a bounce. But if it's taken out, that 1673 level could be hit by by Friday. Now, this is what I would say to you. I have signs here that say if there is going to be a bounce, Bank of America is in the category of the last one rolling over. Therefore, it's the one that will have the quickest bounces and probably the biggest bounces. So I think you're right in choosing this if you're going to be long something. I'm very cautious here. I would say I'm not very cautious. I'm bearish. And it's very unusual for my subscribers. They know that for me to have so many short positions, and all of them, I don't want to jinx it, so I'm not going to say anything. So they're doing okay. So
well, see, I only go long when I have to. So when I go into any stock, I always think about, what if something happens today?
Right.
Does this stock have a long shot? And that's why I play with Gilead a little bit, but I really stay away from the biotechs because, as you know, I mean, anything can go wrong.
So let me do this. There are a bunch of things that I need to do, but I did want to just say to you, I'd be a little careful. I'd have a rather tight stop on Bank of America. If it survives today, we might have a good bounce tomorrow. That's when you're going to get the best out of Bank of America. But just please watch the 1668 level. If it takes it out, then what did I say? It was 1662 is the next level. If that support goes, you've got the gap down at 1680 to 1661. I'm negative, so just be careful. So best of luck. Let me know how it goes. Thanks so much for calling. I always appreciate it, Scott. Have a great day. So now what I want to do, folks, is I want to go to the VIX index. The volatility index right now, it just did it. So the VIX has gone to a new recovery high. Now, we have not seen this before. Now, there are all these formulas that you got to know and everything. I make it as simple as possible. I've got numbers that I look at on the volatility index every day. I go to my subscribers and I say, hey, subscribers, this is what we're looking at. Let me just see if I can pick it up right now. Move this away, move this up. This is that Boston skyscraper. And then I also wanted, Loretta had a good question here as a trial member of my opening call. I'll get to that. A good question there. Now, look at this chart. This is not the one I wanted, but I picked it up. Remember I spoke about this black background monthly chart? Look at the way the yellow line is starting to move below. This is 2 days ago. It wasn't even yesterday and the day before on the monthly chart. Look how the fast-moving average, it's the 9-period differential, is breaking below the slow-moving average. Look at the way the stochastic's making those bumps, but is starting to fail. Look at the way the on-balance volume has turned down already. It usually goes with the price. And look at the relative strength over there. So that's what I'm saying. That's why I'm more negative than I normally I just say it's the daily chart and the weekly chart should catch up. But that weekly chart in one move, yesterday and today, just one move has gone from a sell signal almost to a sell mode, but I have to wait for Friday. Tomorrow's close. So this is what I give my subscribers, and I showed them, here's the volatility index, 120-minute chart, and I said, under these conditions, that's a peak D. There should be a pullback, but if the volatility index maintains, holds its highs, then what we're looking at is that the daily chart, which is in leg D and which should pull back, it's not going to do that. And all of a sudden, for the first time, you have got a trend change in the volatility index. Now, let me explain what I'm talking about, a trend change. If you go to, let me get rid of, this is the 120-minute chart. It's going right to, and we are long. I should just mention because for clarification, we are long. The 200% volatility index, we've been long for a while. I'm not even sure what, 355, 262, we're up a lot. So the VIX index right now is going to be bumping into resistance if it gets to the 1789. I get a feeling that this is the first time that the weekly volatility index, let me show you now. Well, first of all, the daily's in leg D. Remember, 1 penny over the previous high bar in a daily chart extends that letter. That's how simple the Chapman wave methodology is. Now, let me show you what I'm looking at. And I've been drawing this chart and showing it to my subscribers for a while now, saying, please be aware of these beautiful, if you don't look at chart patterns as fractals, that is, if you don't look at them as taking little cells that repeat in exactly the same template in different time frames or sizes, then you're kind of missing the point of what human nature is all about. We do the same things over and over. Look, the cup formation, the 2773 back in June or something of 2012, pulls back to 1330, pops up to 2320s, pulls back, peak C minus. They don't always go to D's in the sentiment indicators. Yes, it does go from 11.05 up to 2191D. That 21 area is just, it's like a magnet. It's drawing us up there, especially now that we've broken above the 200-period moving average of 16.93. And look, the stochastic is starting to rally, making higher highs and higher lows. And look at the MACD. The MACD fast moving average deflected upward, not down, but up. So I'm of the opinion that because of my monthly charts, we are looking at something that I've got to respect that might have more in it than just a little pullback. Those people that I kept hearing about, oh, we would love a 10% pullback so we could be buying. They either were buying the other day because they thought that was the low, or when it gets to 10%, they're not going to be buying it all. Let's go to Marvin in Orlando. Marvin, how are you?
Hi, how are you? Thank you.
Good.
You had mentioned the S&P will get to 1940. Do you expect a counter-trend rally at this point?
Okay, so now this is the other very important thing is all these beautiful questions coming to just tying in to the very things that I wanted to look at. My guess, I had an email from someone who's really a good technician. I know that because she sends me information. I kind of followed up in my mind to see how things panned out from that perspective. And her opinion the other day was that a particular technique that she uses, I can't remember, was it the VIX index? When it gets to a certain level, every time for the last 3 or 4 times over the last number of years, when it's gotten to this, I think it was the last number of years, when it's gotten to this level, there's been a tremendous rally. And my answer was, my work doesn't say that we can rally. We'll see. You could be right. I just follow my work. And one of the reasons is that when I get a cluster, bottoms are made very often with a cluster pattern. Almost all the indices, it's just those rare occasions like October of 2002 with the Dow and the semiconductor index made a low, and they made a higher low back in when March came around of 2003, but the S&P, I think it was, went to a new low and the Dow didn't. So otherwise, cluster patterns occur like March the 6th, when we got our buy signal in the Dow Diamonds of 2009. That was a Friday. If you look at Monday, that was the S&P low. And I remember there were some fantastic calls that Larry was making way before, months before. And, it just, everything seemed to come together for that. Tops are very made asynchronously. So the Dow made its top in 2000, in January, I think it was mid-January. And then it goes to March and March when the S&P and the NASDAQ go to all-time highs. An unbelievable move to all-time highs. I still have those cups and things that were being sold where they have the ticker tape of all those stocks. I don't know if I've still got the cup. I've got a little milk bowl or sugar bowl or something. I had it the other day. I had a laugh. AOL has had all these. Most of the stocks are not even in existence. So when you're looking at tops, look, IWM made its top, the Russell 2000, back in, was it June or July? Yeah, July the 1st. July the 1st at 120.97 on the IWM. And it had a rally retracement at a peak E. It was a peak E there. Beautiful left side, right side price time match. Makes a cup formation, which fails, the right shoulder failure, and then it comes down. Now, this is going to be really important because the small caps have been leading the way down. But what's really interesting, and I used to talk about this a lot when there were a lot of generals, there was General Foods. I think I've been for years trying to remember what it was. I think it was General Foods that was in the Dow. So we had the 3 generals. We had General Electric still there, General Motors, well, barely there, General Motors gone, and General Foods. And I remember always saying to my clients, the generals can lead, but they can't lead without the troops. And the troops can lead, but they can only lead for a little while without the generals. You need a synchronous move to be able to maintain direction. So the smaller caps move lower, but look at my Dow quartet. The Dow quartet, GE makes its top at 2753 back in June of this year. IBM makes its top back in 2013, March of 2013. Triple M went to a new high. It was the leader of the pack on an alternate count G/C in the monthly chart, but a rogue wave, just the most perfect rogue wave. Maybe tomorrow's Technical Friday. Remind me someone to talk about the rogue wave. Perfect Triple M rogue wave to that top near 148, trading in 138, down 10 points right now, and 1 point today, but 10 points from its top. And that made the move that was on the 19th. A number of stocks and indices did go to new highs. But the New York Stock Exchange, 1860 or nearly 2,000 stocks, it made its high back in June the 1st as well, just like, a week of the June the 4th week. So you've got this rotation into tops because the S&P, SPX, made its high 2019 on the 19th, and the Dow, I think it was also on the same day. The Dow, so I'm trying to get the point across that the way we were coming into the tops, the way the selectivity, the lack of leadership, Tom was talking about lack of volume, Dave White was talking about lack of volume, Steve Rhodes has been talking about his Rhodes indicator. A lot of these things that we're looking at are saying that the rug has been pulled. Look at the weekly chart of the weekly chart of the Dow. This particular move has no connection whatsoever to a peak P. It has every connection to a peak F or a G. So I'm going to be considering that there was a phantom peak over there that I need to count, and that this really is probably an F or a G top, because you've had a stochastic turn back down at 80% now, very close to going under 80%, and the Chapman Wave inside track is being tested in the Dow, and that says if by early next week the Dow's trading under 16,600, not good news at all, and that would be that double arch formation that in the stochastic right there. That's what we saw in October of 2007. So I can't even remember. What was your question, Marvin?
Oh, do you expect it to hit some level and then try to bounce from there?
Yes. Okay, so what I did recently is I had a question from Z in the Den, and John had this really good question. He said, when do I think, what levels would I be looking at on the downside? So I said to him, I'm circling this right here, and it'll be within about, I didn't think this week, but I thought within by next week, mid-October, going to mid-October, we should be testing this trend line. Well, we did it today. So the speed with which you take out predetermined levels of support tells you about the underpinnings, the torque, before the momentum even sets in. If you build up enough torque, if any of you ski or do anything that has this momentum build up that you can lift yourself up, that is important. So I'm looking at this, and I think we're going down. The big test is going to be a test of the week of the 8th of August, hey, before I go on to 1904, can you hold on?
Sure.
Okay, because I don't want to jump to 1904 from the 1929 level without talking about the steps. I'll be right back. Basil Chapman, Tiger Technician Zone.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. We're back. We're back with Marvin in Orlando. So this is what I wanted to just say about the S&Ps, because as far as I'm concerned, now here's the question. I'll deal with it tomorrow. I don't really want to deal with it right now because it's going to take more elaboration, and I want to get close to Friday so that I can see more or less where the S&P can potentially close. But in the meantime, that is on the weekly chart, which will help me with my monthly chart. I'm going to give you levels that I would look at right now. As we're speaking, the S&P has just dipped underneath that really important support level. But I have another support level that I didn't want to put in, but I will put it in. I'm going to just put it in briefly and then take it away because I don't like to preclude the other side of the coin, which would be a sudden squeeze to the upside as more and more people are becoming bearish. I can see the way the volatility is acting right now. The volatility index is, we're real close to a 1.5 to 2 day, or maybe even a 2.5 day pullback in the VIX index. This is my thinking just for now. So this is what I wanted to say to you. Friday is very important. So if on Friday we close, if we're at 1931, for whatever reason, I don't care what it is, if we close above 1952 tomorrow, that's going to say to me, we're just going to make a series of kind of M-shaped patterns with lower highs and lower lows. This scallop formation that I show when I show my CD introducing the Chapman Wave with these H formations. But if for any chance there's a rally attempt later today, and then yet again the Dow goes and closes down strongly lower, and the S&P is anywhere close to 1929 to 1933, that's going to say to me that the best we can look at tomorrow is probably some kind of a doji with a try to attempt, if the weekend is peaceful, we can try to attempt a rally on Monday. But it's the monthly chart that's really important. So close on the monthly chart. We've only started October, but going all the way through October, if there is no new high bar, if we haven't gone above 19.26, but instead we've taken out the low of the candle of August, the low is 1904.78, I suspect that I'm looking at something that's going to take weeks and maybe even 1.5 months to 2 months of consolidating before we can really think of anything like a really decent rally. So I'm watching this very, very closely. Hope that helps you, Marvin.
Okay, thank you, Basil.
Okay, so now a bunch of questions. Just a question that Dan Ollie wants to know, thoughts on MAR. You remember I spoke about MAR Marriott, and I said, this has been the most amazing stock. How come? And look at that doji candle in the monthly, an all-time high, gone almost parabolic. Look at peak F potential in the weekly chart, peak F in the daily. We happen to be short this from this in the 72s, and right now it's trading at 66. So Marriott Hotels is just, this is important stuff. These are the leaders. Look at that massive move to the upside. Look at the whopping candle so far this week. Yes, Marriott, I think, getting close to a little bit of a bounce, but my guess is that this cluster pattern by the doji going to 64.12 is really going to be very, very important. Hope that helps you. Now, let me just go to the question here, because I think it's an important question, because, you know, we all get subscribers coming in all the time. So yesterday, we were stopped out of our Dow short position, and I wanted it back in. And yesterday I said, we want to buy it back, and I put in a price. And then I got a couple of emails from people saying, hey, isn't that too high? And I never have a high price like that. So I quickly shot out an email at about 9:10 in the morning Eastern time to say, no, the price is, and I can't remember what the price is. And that went out, and within moments, the Dow, this particular instrument, came right to the point that we could get it at. So some people did get it, but the people who came in at 9:30, it was 2-3 cents off. But whenever there's a mistake in my opening call, and I do so much work, I'm going to spend 3-4 hours on my call every day. And whenever that happens, I quickly send out an email before the bell. And for those of you who can trade before the bell, that's what you get. We got enough shorts, so if you didn't get that. So I'll explain. I'll send out tomorrow clarification on how we do the Traders Corner. I'll make it clear, Loretta. Thank you so much for signing. Hey, folks, Larry Pesavento.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.